Hello and welcome. In this video, we will learn about debt mutual funds. Alright? Now, you know what bonds are, correct? If you want to buy bonds directly or if you want to invest in bonds, then you can visit this website. This is goldenpie.com. You have to create an account here and then you can buy or sell bonds here. Okay, when you scroll down, you'll see the bonds available and also the IPOs. Okay, the second website is the fixedincome.com. Once again, you have to create an account here and after that you can buy or sell bonds here. Now let me scroll down and show you the bonds that are available to invest. So here you have Muthoot Finance bond which pays 9% interest, okay, and interest payment is annual. So here you have Nido Home Finance and you have 9.2% interest paid monthly, meaning 9.2% interest is for the year and they calculate how much it has to be paid every month and then they pay it monthly. Okay, the maturity of this bond is 2026 and the face value is 1000 rupees. Okay, so it has CRISIL rating of A minus here. Alright, so you'll get all the details required for you to analyze the bond before investing. Okay, yes, now let me close this. Here in this video, our main focus is on debt mutual funds. We have already learned what equity mutual funds are. Equity mutual funds are the ones that invest directly in the stocks or shares of companies. And debt mutual funds are those which invests in bonds of different companies. Okay. Now let me go to mutual funds here. You can directly click on debt funds or you can go to explore mutual funds and click on debt funds. Okay. So I'll click here and when I click here, the different categories of debt funds will be visible. Alright. Now I will not be able to explain all the categories because I have not explained the concepts related to them, but I'll explain most of these. Okay, let us start with overnight debt mutual fund. Let me open it up. Okay, so these are overnight debt mutual funds. Now what do they do? These mutual funds invest in bonds that would expire in one single day. Okay, once again, these mutual funds invest in bonds that expires in one business day. Okay, so if I invest 10,000 rupees in any of these bonds, they would take my 10,000 rupees and invest it in bonds maturing in one day. Once it matures, they will take my money and invest in a different bond that would mature the next day. Once it matures, they would take my money and invest in bonds that would mature the next day and so on. You must remember that it is not your money which would be or it is not your fund which would be maturing in one day. It is the bond in which these mutual funds invest that would expire in one day. Okay, yes, so let me close this. Next we have liquid fund. Let me open it up. Liquid mutual funds are those funds which invest in bonds which would expire in 91 days. Okay, 91 days. Once it expires, they take the fund and shift it to next bond which would expire in 91 days and they keep doing this. Okay, and in the same way we have ultra short duration funds, we have low duration funds, we have money market funds, we have medium duration funds, medium to long duration funds, and long duration funds. Okay, all these vary in duration. Okay, but what you must remember is, or what you must understand is, the time duration for which you want to invest, and that is given here. Okay, now if you have some money which you do not need for next 1 week, then you can invest in overnight funds. It is given for up to 1 week. So this is the fund which is suitable for you to invest for 1 week. Similarly, we have liquid funds. If you have some money lying with you which is of no use for you till next month, then instead of simply having it in your savings account, you can invest in liquid funds, and for 1 month you would be getting some interest. Now this is not available in fixed deposit. Of course you can put it in shares, but then you do not know whether the shares will move up or down. This here is a safer way to invest for short duration. Similarly, if you want to invest your money for 2 to 4 months, then this is suitable for you. If you want to invest from 3 to 9 months, go for this. 6 to 12 months, go for this. Medium duration, this. Okay, 2 to 4 years, and so on. Okay, so do not worry about what they do. Look at this and select the one that you want and do some research before investing. All right. Now, the next thing that you must know is the overnight funds have the least risk and also the least interest rate. Okay. What are overnight funds? The funds which invest in bonds which would expire the next day, correct? Now, what wrong thing can happen in one day, right? So, this here is the safest fund, and so the interest that they offer is very less. As the duration increases, the risk associated with the fund increases, and also the interest rate. So, here the interest rate would be more. Okay, because this is for longer duration. All right. Next, we have banking and PSU. Now, this fund lends money only to banks and public sector companies. Okay, they research which are the good banks, which are the public sector companies, good public sector companies, and they lend money to only those. Next is corporate bonds. These this fund or these funds, the funds under this category lend money to companies, private companies. All right. Next we have gilt funds. Here the mutual fund invests only in government bonds or government securities. All right. Next we have floaters. Now here everywhere the interest rate is fixed, but here the funds invest in bonds and the interest rate varies here. Okay, according to the change in interest rate of bonds, you would be getting the interest in your mutual fund. Okay, so the interest rate of mutual fund varies here. Next we have credit risk. Here the mutual funds invest in bonds which do not have very good credit ratings. In the previous video, we talked about ratings, correct? I told you that AAA was the safest one. And I also told you that as we go down, the risk increases because the credit ratings are not so good. So here, the mutual fund invests 65%, at least 65% in not so highly rated bonds. So what happens here is, since you are taking risk, if you invest in this, the return would be more. Return would be more. Okay. Of course, the mutual fund house would check amongst the bad bonds, which is the good, and then they would invest there. And then we have debt fund of funds. Just like we had equity fund of funds, we have debt fund of funds. Okay. Now, if you want to look at any of the mutual funds, then click on the category and click on the mutual fund. So I'll click on Aditya Birla Sun Life Liquid Fund, and the page for it opens. Okay. So here you can see that the expense ratio is 0.21 percentage. Now this is the amount that they take for maintaining the fund. Okay. So you know about this. Exit load here is very less, 0.007 percentage, and you can see the AUM. So it is very huge, 43,962 crore rupees. Okay. No lock-in period, and this is the benchmark against which the returns of this particular fund would be compared. Okay. And minimum investment is 500 in SIP and lump sum in 500, lump sum of 500. The risk of this fund is moderate. Okay. And if you scroll down here, you can see the asset allocation. So the 75% of the fund is allocated in A1 plus grade bonds, and don't worry about this sovereign, and this is cash and call money. Cash and call money are assume or think of cash and call money as very liquid money, meaning you put it today and ask tomorrow. You invest today, ask tomorrow, take it out tomorrow. So it is that liquid. Okay. And remaining, not remaining, and 1.71% in AAA rated bonds. Okay. So this is their asset allocation. And similarly, you can compare the risk and return ratios. We have not talked about this, which we will do in the upcoming videos. But this is how you can get the details of any particular fund. Okay. Let me go back, or let me, go to debt. So these are the various debt mutual funds available for you to invest in. Always do your research before investing. Okay.